Hey there, how you doing? Welcome to the channel. So today, I haven't done this for a while, do a little stock update, just kind of checking on my stuff. So I figure I'll do a video if I'm looking at it myself. Let's see what happened to the stock market today. We're on June 9th. Yeah, so the S&P, the Spider ETF was down just a little bit, but you can see here that, the uptrend is still intact. Not much really going on today, but your uptrend is intact. I kind of wonder if you're hitting some resistance at that all-time high. I think that's what it looks like to be. So that seems okay. So let's look at this guy, XLP. Okay, good. And XLP kind of went down a little more today. Interesting. Let's look at a little longer term chart. Okay, yeah. So, but still, uptrend intact, all that stuff is like fine. So I want to look at the 10-year yield. So, back, I think it was last week and the week before, there was talk, basically, it's talk of like, hey, bonds may be ready to have a rally. And that sort of seems to be the case. So if we look at the 10-year yield here, and we can see, that now the yields are breaking down. So this is the 10-year yield. So, they are coming down. They've really kind of broken some support too. So let's see, let's just put a horizontal line here. Yeah, so this would kind of be area of support. So it's broken that support in terms of the yields. So that means the bonds are rallying right now. So so that should, in some ways, I guess, kind of alleviate some stock market pressure for sure. And then we can look at the other way of looking at it, look at TLT. Now, TLT is the 20, but it's a popular ETF, and this is buying the bonds. So this is the prices of bonds. And you can see here that you've got, basically you had, you could see this kind of bottoming going on in the bonds. And so if we looked at, you can see here that you had a low over here, and then you have the low. And so we're kind of starting to almost get kind of a trend line going up. So you kind of put in this bottom. Now, this is on the daily chart. So it's not like, a super heavy duty kind of, it's not like a long-term reversal necessarily, because this is on the daily chart. So, this is built up over the last 2 months to a point where now you have this rising channel to counter the longer-term downtrend. There's a longer-term downtrend here. So let's see where resistance is. Somewhere in here, there's going to be some resistance at 150 on this thing, and then there's actually, conceptually, there's a lot of areas of resistance. Potentially coming up, but there's, reasonable reason to think that you could now, at this point, you could get a target of 150. So you could go, from where you're at, 142 to 150. That should be like maybe a 10% move or something like that, right? Or something like that. So, that's not too bad. So that's what's going on in the bonds. And then we're going to have, I guess, the inflation numbers are coming out tomorrow. And so that's going to be a big question of whether the inflation that we saw last time has leveled off or not. And I had done that video about basically that this inflation is not due to base effect. It's not due to the dip. So it would be very specific. That dip that you see, where last year, like, the inflation numbers went down during the lockdowns, the start of the lockdowns, that is only like 25% of the inflation that we saw. The rest of it is other things. Now, it's certainly possible that the inflation will go down, right? I mean, it's very hard to keep very high inflation numbers like that. I mean, you had things like cars went up 10%. I mean, that's very hard to sustain that level of increase, So it's very likely that we'll see, the inflation come down. But when you're talking about inflation, there's an interesting guy out there that, like, was it, I think, in Hungary or somewhere, something Academy, Starfish Academy or something. And he's really interesting because he lived through a literal hyperinflation. And so his hyperinflation, he was talking about something like a loaf of bread or something was originally 3 lei or something like that. And by the end of the period, it was like 30,000 lei. And so, that was an actual hyperinflation. Now, I don't think we have that here, but one of the things that he, because that particular currency is not a reserve currency, et cetera, et cetera. So, I don't think that's the case here. But what's interesting is, what he talked about a lot is how, it kind of comes in waves. It's not like this consistent thing where it's like, oh, prices go up and it just kind of comes and goes. There's different periods of, prices going up a lot and things moving where some things are moving up and other things are down, et cetera, et cetera. So, so that would be, so it's both things I think are true. Like if the inflation numbers come out tomorrow and they're not too bad, okay, that's fine. But that doesn't really mean it's totally transitory. You know what I mean? It doesn't really mean that. It just could be another wave in, it could be, wave in terms of like, I mean, I don't understand the Fed. The Fed's like, they want 2% inflation and they got 4%. Taking out the dip in the from last year, you still had 3% inflation year over year. So, but the worst was the month over month stuff at 0.8%. And you're talking 9%, 10% inflation, not you annualize that. So that kind of stuff is just totally a mess. So we'll see here. So on the TLT, you can see you put in a bottom, this is a reasonable bottom here, so this is on a weekly chart. So, it could really be significant. Now the question is, hey, is this thing going to rally? I mean, there's a lot of resistance like I showed on the other chart in these areas. Is this going to be a rally that's going to, cause it to really go to new highs? I don't know about that. But what we could do is we could go here and we could kind of go out even longer term. So keeping it in perspective here, the pricing of bonds, has been, we've been in a long-term bull market where bond prices have been going up and yields have been going down. Interest rates have been going down for years. And it goes even out further than this. This chart is only going out because it's an ETF going up to like 2002, but this has been going on much longer. And if you look at this longer term chart, you can see that, we've had rates going, bonds going up. And, this big correction here, what really happened here is that, you had such a move, like this period of time, you had such a move, this is such a huge move up and you're so far extended, call it daylight. And this is that, how far you're off the moving averages. And it's so far up that it was likely to come back. So for this thing to have, pull back like this down into here is reasonable. Now, zooming in to where we're at, like, oh, we're breaking through. But what we've really done is you've just basically found support at the big moving averages and the trend is continuing. Most likely you would think that the trend would kind of just return to some, right? So this isn't a trend. This is a spike. This is a spike. The trend is this longer term thing like this. So let's do it. Let's clear all these and let's do this. And let's annotate it back here. And we can do annotate, and we'll just draw a trend line. And so, what's interesting here is you have kind of different, you have kind of a trend line, something like that over here, but then it kind of accelerated. So let's see, we can draw a trend line here. It's hard to say, the trend, it's steeper. So it actually didn't even come down to this sort of trend line, this steep trend line. So, we'll see what happens with bonds and stuff like that. But it's kind of like, to keep in mind that with these things that, you basically, this really isn't necessarily a rally in the bonds. It's like, sure in the short term, but in the big picture, you're just returning to the trend. The bonds got beat up because they were so extended. Now, like I had pointed out before, because what happened, because you had such a big move, kind of looking for a color that would be, because you had such a big move and you pulled back so far, you have like a decent move there. And this is how it sets up for like larger topping patterns. Like if the squiggles were much smaller, like within like 5% or something like that, then they're just a consolidation. But if they are big enough, and if this thing does make another run or something, you can kind of form some kind of top potentially. So, it's kind of interesting. Like if this formed a top, like this would be something. So this is like 1 year right here, this little bit. So this would be something that, over the next 5 to 10 years, if this thing somehow like created another like rally up and then couldn't go back and then starts breaking through the averages and breaking through the neckline here, if it started doing that, and then you could really see, that long-term trend change. But at this point, the long-term trend has not changed at all. It's just what happened is, you got overextended in the bond rally, and it pulled back to the moving averages, to the trend line, and that's where it's continuing. So I think that's all for that one there. It's interesting too. I had some I had bought some of this RK stuff, and it has this downtrend. I had this little move, I got a little bit there, and but now I like put in a little handle, and it's starting to break through this downtrend line. So it's kind of interesting. So because it's just overdone, I think that stuff. I'm not like a big fan of Kathy Wood or whatever, but I don't really care. It just was overdone. Here's BitScale Trust. I mean, Bitcoin, I don't know what's up with that. I think that if you look at all the leverage, like, if I look at things that you have these places like BlockFi and other places that will pay you like 8% interest on your coins, like, you just got to be kidding me, right? It's like, how do they do that? How do they pay 8%? They can't pay 8%. They have to earn something more, right? So they have to earn, like, if you 8%, you got to earn 10%, 12% to be even worth their while, cover their overhead. So how do they do that? They don't do, there's got to be something sketchy going on in there. And I'm not accusing of fraud. I'm just saying whatever they're doing has to have, I would say, probably more risk than people are really admitting to or paying attention to. That's what it is. To get 8%, 10% returns, you got to risk your money, meaning that there's a chance you can lose it. So, so if all those things blow up at some point, especially all the stuff going on with Tether and the stable coins, I don't know. I mean, this is not financial advice. I don't know what's going on with that stuff, but I'm all for gambling. I'll gamble with a little bit of my money. Yeah, let's see, Tesla. And I think I had some, what did I, I was doing some gambling. Let me show you. One of the things I was gambling with, we had the meme stock play. So GameStop is, had been having some runs as well. And, big focus is on AMC right now, who ran up. Is this kind of crazy? But the one I actually have a little bit in is this Workhorse, which, once again, this is like apparently at some point, and I don't know anymore, is like this may have had like large short interest. So I've kind of been sitting on this a little bit, and I'm not sure where I got it. I actually got it, I think, in this day or something like that, maybe around 14 or 15, and it's up around 17. But really kind of what I'm doing is I'm kind of just giving it a little time to run and see if it'll break this 18.5. Because see, every time it gets up here to this 18.5, bam, they just beat the crap out of it. Even here, they're just beating it. And then even today, they kind of beat it down as well. So, they're just really they're really fighting it. They're really trying to keep that thing below $18. They're really fighting it, so I'm just playing a game. What I actually done is I had bought some, and I already took like a small amount with 2 units, like 200 shares, and I already sold half, so I already locked in some profit on half of it anyways. But so this range, you can see that there's just all this resistance here, and you can see that effect. You can see that there's actual resistance because the selling is coming in and hitting it. But if this thing somehow breaks out above that 18, I mean, because it went down so quick, I mean, it very likely could really run, because if whoever's you know, whoever's got that short interest, maybe they're trying to protect it. You know, they're trying to protect it at 18 and they're like really trying to hold it. But if it goes through there and they get the margin call, who knows what can happen with them. So, you know, I definitely don't recommend these things. I think that I'm just messing around with it. And, you know, because you see, you have these opening, it just rallies, and they beat it down, gap up, rally, beat it down, beat it down. But we'll kind of see, you know, we're getting to the point where it's pressing up against the 18. See the high, the lows are getting higher, and the highs aren't getting much higher, but they're pressing up, they're funneling up into that 18. And you know, at some point, like what's interesting is like if they end up gapping it above there, then that maybe it would create a big problem for the shorts and force some covering, you know, but can't really say for sure. Another one too, BlackBerry. I know there's been a lot of talk, and another similar chart here. You know, it ramped up, and now it's kind of like these, like BlackBerry's another one, supposedly short interest. So they're all trading very much the same right now. And, you know, for me, it's like, I like gambling with it. Yeah, it's interesting. So you try it out and don't, you know, over worry about it. Now it's interesting on like your NEOs here, you know, this thing had a downtrend, but it did find support. And what's interesting, see, this I think is a great example of, you know, so here we have NEO, and this is kind of a great example of how things get, you have to kind of take things, the technical analysis and trend lines and support and resistance, you maybe have to be a little bit, you know, kind of take it with a grain of salt. Don't over analyze it or overplay it. Because here you had, you know, definitely support here. Let's see, I'm gonna try to find a color that works for me. Let's see. See right here, yeah, you had, you know, this support, and it creates this support, and it sort of looks, because the way you had this high up here in this one, now you only have 2 points for that top trend line, so it's technically not good enough. You can draw it, but basically what you have is you know, it really held support right around 32, and then here, see, it broke it, but then it just reversed on it. And it's really interesting too, because see, this bar, this solid is you know, a full down day bar, and then the next day's bar, this little guy here was actually, you know, it was a little bit of an update, but it's an inside bar. So it's kind of like in the if you look at the technical analysis, like it's sort of like a not much changed kind of a day, because it's inside bar. Usually it's like, hey, you put in a new high or a new low, that tells you something, whether things are turning more bullish or bearish. Here it doesn't mean anything. I mean, fine, it held, and then but basically it ended up reversing on this, and then it came back through. And this support here didn't really do much resistance. I mean, you see like a little here, you had this day where it gapped back down, but in the end it didn't. And now you had this like trend going up to here, and now we're getting some selling here. Who knows what that'll be like. But you know, so this is it's sort of like a descending triangle. I mean, so like there's all these different patterns, and in the end they don't mean anything, you know. I mean, it gives you a good idea in terms of, so what would happen here? So now if I'm like trying to apply, what would, you know, technically could I try to figure out here? Well, if this thing starts coming down, a typical thing that might happen is now, you know, this down trend line here, you know, it could turn into support. Now you have, once again, you had support here, here, here. Now you have support, this dropped to a lower level, but basically there's some support there. So for sure, you know, if this was to pull back, come into here, you know, somewhere in the corner of, you know, this area in that downtrend, you know, is where you would kind of think that maybe if it was going to find support, that's where you would maybe look, and that's where you'd look for some kind of a pattern to kind of confirm that, hey, it's making a turnaround, and then maybe you would try to enter, you know. So the technical analysis, you know, is not 100%. It's just probabilities, and it's just kind of giving you some ways to look at it to try to get, you know, a way to get in or out of a trade. So, you know, if you got in your trade there, and then, okay, where would be the first place if you're not really hodling it or whatever, where do you expect to get resistance? So came down, let's say it found support. Okay, well, right up here, right? Somewhere in here is where you expect, well, because this is a previous high. You kind of have highs in this area, right? Here, and then we can look at the volume stuff. But really, at this point, you had these 2 points here, somewhere 42, 45 is where you expect that maybe you get some resistance. So maybe you get a pullback. Does that mean you sell? No, it doesn't mean that. It just depends what your strategy is. If you're doing small term swing trading and your strategy is I swing and I hold it for like a week or something, that might be a week and you sell the whole thing. Or if you're just looking for, like, let's say you're in this on a longer term play on a fundamental and you're like, okay, this thing corrected and you just were looking to put some more back on, hey, then maybe you're just going to hold it longer. All that's fine. See, no one can tell you what to do because you have, it just depends what you want to do, what you're trying to do. So that's something to remember. And so technical analysis is really good that way. It gives you some help with that. And yeah, I was looking at the other guy. See, like XPEV did this too. This XPEG, this guy did a similar thing. He had the downtrend, and then it's really interesting how it's just going straight up. So I don't know what that straight up is. I don't know what that means. I mean, it's just so odd that it goes straight up. I mean, so it just seems like someone's, consistently buying some and they're willing to let the price go up. Maybe, I don't know. So that's kind of it. So, these are interesting. The GameStops, the AMCs, I'm in on the workhorse a little bit, but I really am going to just get out pretty soon. I just don't want to hang around this thing very long, with the volatility going on. I mean, it's kind of amazing. This is, I'm trying to remember, but I don't even think you saw this kind of crap back in the tech bubble. I mean, I remember it was pretty crazy in the 2000s, late 90s, 2000s, run up to the tech bubble. But these are huge percentage moves. You're talking like, 50%, you're the 20, 30, 50% daily moves, daily range. It's just really crazy. And then the volumes, on this day here, let's see, that was that day, but I think it was this day. Yeah. This day you just had, God, almost 160 million shares. So it's just crazy. You still have high volume in there. So it's kind of legendary. This is kind of legendary stuff. This won't last forever. And so if you're out there trading and think this is the way things work from now on, I wouldn't think so. I mean, the worm will turn. It will change. That's for sure. And, but right now, just all you can do is try to take advantage of it when you have it, because we have margin debt, a lot of margin debt out there and stuff. It's just all being pumped up. So that's it for this one. Trade on, gamble. I wonder if this stuff's going to fade because Vegas is kind of getting busy again and opening up is my understanding. So, hey, people can go play craps instead of this stuff, But of course, your gambling is at every roll of the dice on every hand, it's like 100% loss. You put in $5, $25, $100, whatever. It's like on that hand, it's like one shot. You either get it or you don't. Terrible odds. All right. Talk to you later. Bye.